What's up, coin traders? Thanks for joining me. Going to look at MATIC, Polygon MATIC on that ticker right now, currently at 110.03, and we did just close the most recent monthly candle. So do want to be talking about this chart, this monthly chart here in the video and show today. So if you do like this kind of content, go ahead and hit that like button and subscribe as well so you can stay notified on future updates. But so first thing that's extremely and very apparent right now is just the level of complete relevance of this $1 psychological on this monthly chart. So ever since we have had the initial break prior to April of 2021, that's when we found an initial resistance point, and then after that had a huge level breaking above. And as you can see, once we actually pulled back during the summer and late spring of 2021, we had a very nice backtest of this, and this 1 cent psychological held up and maintained. And we can actually see that there's a little bit of a higher price support level coming in right at 108. So a little bit higher off that $1 psychological. And so unfortunately, after we did top out at our all-time high for MATIC, we were looking at a high of 303. But a pretty quick flush over the following few months. And so initially we were actually eyeing, let's go ahead and turn off the 26, but we're actually eyeing the 12-period exponential moving average as well. So big support off this bounce, still maintain the 1 and 108 psychological levels. And then even pulling off of the all-time high, we saw a little bit of wicking down below this monthly 12-period exponential moving average, but still we saw a very nice fight for the bulls to buy up this level, which actually saw a close maintain on top of about 160, which was, you can see, a big resistance point before, flipped to a big support point, and then a big support point for 5 months before we actually did find our downside flush. And yet still, even in that instance, we did maintain and hold this $1 psychological level. But once we actually broke below that on the next month, you can see we did break the 108 support level, and that did hold up nicely as a big resistance point for the bulls, allowing the bears to take control and actually push prices below this $1 psychological level. So ever since that happened back in May, we've been seeing both the $1 psychological as well as the 108 be very big resistance point and a huge zone, and we can actually put a different level on it. So we were pretty much looking at closing resistance for this monthly. Let's go ahead and zoom in as well, because you can see that we were looking at a monthly resistance that did come in pretty much right around the 93-cent mark. So you can see big point of resistance, held resistance the whole way, and another closing level of resistance. So now the fact that we had an extremely big and bullish month that just ended up closing for Polygon MATIC, huge, nice bullish candle that completely annihilated all three of these resistance points. So the 93, that was this big level of closing resistance, the $1 psychological, and the 110 or 108 level that was big support before hitting the all-time high. So what does this mean? Well, a fact that extreme power came through to push through all of these resistance points that were extremely relevant the whole time that we've seen MATIC in existence. And so now, since we are looking at prices being on top of this big zone, we're actually going to find this big zone as another nice big point of support. And ideally, we wouldn't see any wicking even pass down below this 94-cent level. So now I do want to flip over and talk about the weekly chart here. And so there's a lot of things that are a little bit more relevant about this as well. So first thing, extremely notable right now is that up overhead, despite breaking through a big resistance zone, got stuck up at 120, which was big resistance on this initial bounce that we had back in October. And so pretty much next level of resistance up on top overhead is going to be coming in about 135. So we can put these as extremely big resistance points for upside, but what's also extremely notable right now is that we have a very nice hold and close on top of all the exponential moving averages, and we are starting to see a nice formation of those. So specifically, we're looking at a very nice support happening on top of this 50-period exponential moving average. And so also, if we do look down on the volume for the week, a little bit of week over week increasing over the last 4 weeks. So very nice strength and move to the upside, especially after holding a very nice lower support level, coming in right at about 74 cents. So far for these weekly candles, we're looking at each week being a higher low, and the current one, obviously, even despite being only a couple of days into it, still maintaining that higher low as well. So plenty of room to the downside to still see a rising candle, which actually would still be right now about an inside bar, even if we do continue to pull back bearish. So nothing's really of suspect just yet on the weekly chart, especially since we do have a lot of nice side supports to the downside. most notably down to that $1 psychological level, which, just to point out on the chart again, big resistance on this weekly. Looking left as well, big resistance. But so where we looked at it before, we actually had a lot of resistance on this big exponential moving average gap and zone as well. And so since we've actually broken above this 50-period EMA, maintained it, held that level as support for the week, and then the following week as well, and then saw additional follow through with increasing bullish volume, we're looking at a longer term chart setup on this weekly that's still extremely favorable for bullish upside. Like we've talked about for the rest of crypto, though, we are still due for a shorter term pullback based on a lot of this 4 weeks of just continuous upside. So let's go ahead and switch into the 2-day chart here now. So one of the things I want to look at on the 2-day chart is the VPVR, volume profile visible range, just because I want to talk about the amount of volume that we have over here on the right at the different price levels. So as you can see, where the current price level is currently sitting at a very nice point of mass on this volume for the VPVR. And just above that is the 120 resistance that we talked about. And you can see that the volume's actually not as significant as some of the other price levels. So assuming that that does play out as relevance to the overall resistance zone, we can see that if we do actually end up breaking 120, bulls are going to have a little bit of an easier time getting up above that level to that 135 resistance point. And if we look on the VPVR, that's pretty much where the next big body of mass starts, going up through about the 140 level. So if we look left over here on the chart a little bit more, you can see that if we look at where 140 is and we draw a line, you can see just how much of a relevant line this is. So big point of support, bouncing off this level. And so when we do analysis like this, we pretty much look at big targets like that up overhead to gauge the effectiveness of strong upside resistance points. So essentially what that means is that we talk about 120s being the next upside resistance, but that's not really going to be as much of a struggle as about 135, because we know that once 135 breaks, seeing all the way up to 140 is going to be an extremely tough level to get through. So that does have us thinking that 135 is going to be a lot more relevant than 120, and that there's probably going to be a significant struggle up from 135 to 140. And that's exactly the opportunity that we like seeing, to be able to consolidate, establish a time period where we're pretty much sitting in those overall price levels. So if we're talking about a timeline, I'm pretty much thinking that through the duration of February, we'll probably see prices in that overall zone from about 120 up to about 140. That would probably want to be one of my most ideal scenarios anyway, confirming this 120, testing the 135 and 140, back testing the 20, and then being able to smash through once again. That would be an extremely favorable setup in my opinion, because if that were the case, then that would lead us to believe that on the downside, 140 is going to be an extremely strong support point as well and allow for a lot more of that continued growth and upside movement. So now let's go ahead and flip into the daily here before we wrap up. And one of the big significant things that I saw on this MATIC chart is just this period of consolidation before this most recent big spike. And the thing that stuck out about it, and I still end up kicking myself for not jumping into this trade, because I saw this big consolidation over this big period of a big resistance point right at 95 cents. And especially after being able to back test the exponential moving averages like we saw. So we saw a very nice test off this 12 and then another nice back test off this 26. And now if we actually zoom out a little bit, there's an extremely nice price level that does come in right at about 103. And the reason it's significant is that if we look all the way left, big point of support, big point of resistance, and then again, on this consolidation, big point of resistance. So now to actually find enough of a spike to break above this level, it's going to be extremely strong, nice support, because consolidation always forms a lot bigger of support than just one test and one off level. So if we have multiple attempts of that overall zone, that's going to be a lot stronger for support than just one attempt and pretty much a rejection and an immediate blow through that level. So now I think on some of the shorter terms like the daily and even shorter than that, we're going to be reliant on what happens with the FOMC announcement here coming up here in the next day. There have already been a bunch of unofficial announcements that we are going to see another quarter-point interest hike and that there's not going to be any pivot just yet. I think the negative bearish impact of that's starting to wear off a little bit, but still nonetheless, I do still see it applying a little bit more bearish downside pressure. But knowing that we have an extremely strong support zone from 103 all the way down to the $1 psychological, I'm not really worried about pulling back and finding a new lower low to change that trend in that instance, because for MATIC, we actually would have to get to a low of 93.3. So that's going to be our point that we would have to actually see break in order to start changing the trend on this daily chart in order to have us find that lower low. But of course, I would love to know everyone's thoughts down in the comments sections below, what you think will happen, what your predictions are, disagreements, all that stuff. Do love getting back to each and every one of you, no matter what type of comment it is. That is going to end up wrapping up for the show today, though. So if you did enjoy, please hit the thumbs up, like, and subscribe if you haven't done so just yet. Do appreciate all the continued love and support. As always, it does mean so much. Stay safe, take care, everyone, and I'll catch you back in the next video.